It's time for our next session, Financial Inclusion to Unlock Economic Opportunity. We're going to talk about one of the biggest challenges we face today, the inequalities in the financial system that leaves 1.7 billion adults unbanked. This panel is going to explore today's barriers to financial inclusion and get into how these barriers breed distrust in our systems. They'll also talk about how greater inclusion actually stimulates growth and contributes to a stronger, healthier global economy. We've got Ratna Sahay from the IMF and Ronaldo Lemos from SDF's board, and leading the conversation, SDF's Chief Marketing Officer, Jordan Edelstein. Jordan, over to you.
Thanks, Justin. Hi, everyone. Good morning, good afternoon, good evening. I'm going to dive right in, quickly give some background on our panelists. Ratna Sahay is the Deputy Director of Monetary and Capital Markets Department at the IMF. She's joining us today from India. She leads key policy papers in projects in a whole range of areas of monetary policy, including financial inclusion, and one of her specific focuses is financial inclusion as it relates to economic growth. So a bullseye for this panel. She's also taught at Delhi University, Columbia University, and New York University. And also joining us, as Justin mentioned, is Ronaldo Lemos, who is the Chief Scientific Officer at the Institute for Technology and Society in Rio de Janeiro. He's joining us from Brazil today. He co-created Brazil's Internet Bill of Rights law in 2014, as well as Brazil's National IoT Plan in 2018. He's been a visiting scholar at Oxford, Princeton, MIT, a visiting professor at Columbia University, and is actually currently a visiting professor, although virtually, with Schwarzman College in Tsinghua University in Beijing. So thank you both for joining us. I'm going to immediately tap into, it's good you guys have the professorial experience, teaching experience. I'd love to start with sort of a level set on how would you define financial inclusion, and has that sort of evolved over time? Ronaldo, I guess if I could start with you on that one would be great.
Sure. So it's great to be here. And my perspective usually is from the developing world. So as we know, a lot of the developing countries are still struggling to provide financial services for the majority of the population. So that is the case, for instance, of Brazil. And technology can play a very important role for that. And I think one key example we have worldwide is the case of India, which has done a phenomenal work in basically including more than 500 million people in a quite short time span of 7 to 5 years. And one of the ways that India performed so well is because they created a platform called Aadhaar that basically made access to governmental services much easier. It created a digital ID, and basically without having to be physically present in a bank branch or a governmental place, you could basically use your cell phone in order to get access to a bank account. The question that we have to ask is that enough? So can Brazil follow the same steps? And even even if you include those people, are we sure that they have access to the full possibilities of financial services? And I think this is the question we should ask. And once again, I think that technology can play a role to deal with this issue.
That's great. Ratna, what's your perspective on kind of definition of financial inclusion, and has it evolved, and what you're seeing even relative to what Ronaldo mentioned in India?
Thank you, Jordan, and let me just thank you for having me on the panel. It's a real pleasure to be here. So the way we think about financial inclusion is it captures a range of financial services. We are most familiar with the transactions payments aspect, but it also includes savings, credit, of course, and insurance. So the saving and insurance instruments are much less developed, and we have less data on those. But on the payment side and on the credit side, we are able to say a lot more. And these are services which are to be provided both at the individual level, but also at the firm level. what it really means is that households and businesses can have access to very important, useful, and affordable financial products and services, which meets their needs, but it meets their needs in a safe and sustainable manner. And of course, we should not forget that there is a reason why we want to extend financial services to as broad a population as possible, and that is to meet the broader goals of society to a point you're going to turn, I believe, on economic growth, on improving people's livelihood, reducing poverty, etc. So there is a broader goal to be met. And I should tell you, as a macroeconomist, we were not so focused on financial inclusion until we saw the US subprime crisis, whose goal indeed was to increase financial inclusion, but it wasn't done safely. So that's when we, the IMF, started focusing on this very important topic to meet many macroeconomic goals, apart from growth, also financial stability and inequality.
Yeah. That's so interesting. I don't know if anyone would have pegged that as potentially the catalyst for the IMF, but it makes total sense. Let me follow up with you specifically, Rana. Just to start, you mentioned the different aspects and vectors of financial inclusion that exist. Are there sort of some more than others that are more important in terms of driving economic growth, or are all kind of aspects of financial inclusion created equal?
So I will tell you about the study that we did, and the study that we did focused on two aspects, Jordan, which was the payments transaction aspect and the credit aspect. And the reason we could not cover savings and insurance is because, as you know, at the IMF, we have 190 member countries. So we want to collect data from all these countries. And so we couldn't find much data on the savings and insurance aspect. So what we found when we looked at the savings and, sorry, not the savings, the payments and the transaction aspect is that as you increase financial inclusion to wider sections of the society, there is a clear relationship between economic growth and financial inclusion. Very clear. And why does that happen? Because it allows firms to borrow, to invest, contribute to future growth of economies, and it allows households to smooth their consumption patterns, build savings over time, improve their livelihoods. And this is on the insurance aspect. It also helps households and firms to protect themselves from shocks and better manage risks. And for all of these, you need payments transactions. Now, what is really interesting is when it comes to credit, and again, I'll refer to the 2008 financial crisis. Indeed, as you increase credit, it does provide individuals and firms to increase their participation in the economic activity. But if there is no proper supervision and regulation, then too much credit can lead to financial instability. And that financial instability can then hurt growth. So there is a link on some aspects of inclusion and growth, which can be detrimental. But the good news is, and we found this across all the 130 countries that we studied, is countries which had great supervision, high quality supervision and regulation, they were able to increase extending credit to larger and larger proportions of the population. Of course, the returns are lower as you get to the marginal borrower, which is not as creditworthy. But there's a long way to go in the world on that.
Gotcha. Great. Ronaldo, one thing that came up in our previous conversation the three of us had was actually the impact of fintech, and particularly during the time of COVID, and how COVID has impacted development around fintech solutions around financial inclusion. What have you seen that sort of piqued your interest, or where you've seen the needle move even within the last year as the world has dealt with the pandemic?
Sure. So I think this is a key question because take, for instance, the case of Brazil. So Brazil, as everywhere else, entered into an emergency situation in which a very large portion of the population could not work, and then they should receive emergential support on the part of the government in order just to make through these very hard times. Question was, 40 million people in Brazil were invisible to the government, and they didn't have a bank account or any form of like a way to basically receive these payments that basically would allow them to stay at home. And other countries like Kenya, India, Peru, that have worked before in this idea of financial inclusion did so much better than Brazil. And what Brazil had to do was basically to create, in a very rushed way, a sort of an emergential digital account. And of course, it was better to have it than not. And this emergential bank account was basically receiving enrollments from the entire population that was invisible from the government. But as a result, what happened is people did get a digital account, but if you look into the numbers, you didn't really know who was actually receiving the support from the part of the government. So there was a study basically saying that people at the top of the social pyramid in Brazil, people that are wealthy, they were basically being accepted to the platform the same way. So basically it was very much a blind operation in which you basically would accept without much scrutiny everyone. And on top of that, fintechs also played a very important role. So there was this huge debate whether you should give people access to physical food, like basically hand them a package with their basic resources, or whether you should give them money. And once again, the wisest policy, of course, was to give them money and let them decide what they need. And fintechs played a very important role here too. So in a short time span of basically 8 to 9 months, Brazil had to completely reform its access to the financial structure. Question is where do we go from here? So the initial steps have been taken out of necessity, but in my view, and I think I follow very much what Ratna basically just said, financial inclusion is much more than having, an enrollment number in a bank branch somewhere in which you can receive money. You have to think about insurance, credit, and so much more. And I think we are still pretty far away from that.
That's an excellent point. And I think, Ratna, you mentioned earlier there are all the different aspects of financial inclusion and that matter, that contribute to growth. What have you seen in terms of, over the last year, the impact of the pandemic, similar to what Ronaldo was just saying, where you've seen solutions start but not finish, or have you seen instances of success, just in terms of what you've seen across the globe?
Jordan, it's really interesting that we often think of lack of financial inclusion for emerging markets in developing countries. And we don't think of advanced economies. Because in the advanced economies, at least the payment systems are very well developed and most people have access to traditional finance, let's say. Now, with the pandemic, it became really clear that contactless and cashless transactions are at a premium. And this was for everybody. It didn't matter which part of the world you were. And interestingly, it is mostly needed, still is, for the efficient deployment of government support measures. and targeted to a pretty wide section of the population. So what we are finding, and it's very consistent with what Ronaldo is saying, that countries that had gone digital, they tended to do quite well. And by digital, I don't necessarily mean having very sophisticated platforms. I even mean just having, mobiles on which you can receive, and do transactions. So many countries in the African region, sub-Saharan Africa, they were doing quite well. Of course, a lot of Asian countries also, and you see that these two regions on the digital side have actually done much better than some of the other regions. And interestingly, we had conducted interviews across the globe before and after the COVID. And the US, unfortunately, I'm sorry to say, was pretty behind because their whole government platforms were really ancient. They just couldn't take the pressure of so many requests in giving, unemployment insurance or the COVID payout, etc. In fact, just to give you an idea, when we looked at financial inclusion in sub-Saharan Africa, especially, both the traditional and the technology related, in the last few years, I can talk about at least 8 countries where traditional services had fallen, but the digital services had really risen quite rapidly. And these are countries like Botswana, Nigeria, Rwanda, South Africa, Zimbabwe. So when you look at the global picture, fintech to me is a great facilitator of increasing economic opportunities, because right now more than 80% of the adults in the world have access to some form of digital platform, whereas on the traditional side, traditional services, it's only 60%. So I see a lot of great hope and benefit in extending fintech, especially now. And the governments should take it as a top priority to do a number of things, and maybe we can talk about that later, that they need to do to transform their societies.
Well, let's follow up on that point, because I was going to move to barriers, but maybe the better way to frame it is around enablers. I mean, what do you see as the sort of key steps that governments should be taking around sort of setting the right environment, kind of priming the pump for greater financial inclusion?
So, Jordan, you'd still be right to ask about barriers, and because it's just the flip side of the enablers question. Based on both empirical work that we did and also the interviews, I have to say we are quite concerned about digital and financial literacy. And this cuts across all income levels within a country and across countries. So I do feel that countries like, it's a small country, but it's a great country. Singapore has done a phenomenal job in educating its population. It's something you can do on the television. It's something the private sector together with the government can do, and it doesn't take that much time. I work for the IMF, but right now I'm in India, and it's interesting. Ronaldo gave the example of India. To me, it is stunning the kind of services that are being provided. And, I was trying not to go to a particular place by using my credit card because I can't do it as easily online. But they have all kinds of very easy payment mechanisms. So I had to ask my sister, to make some payments because I didn't have the technology on my phone. But anyway, so digital and financial literacy is one really important. A second one I would say is access to really physical infrastructure, which is like making sure there's electricity, the wires, etc. digital one also, like the internet, mobile phones, etc. But very interesting. I also found here in India, you can get mobile phones, smartphones, for less than $15. So I don't know how that happens, but it's available, and people are using it. A third aspect I would mention is, and this is particularly true in the developing world, there has become a shortage of what we call the coders, the guys who actually build these platforms. And so I think that's already in short supply, and I don't know what the governments can do to increase that. Also, I think, in the previous session, the question of building trust with technology came up. And I think that's really important, that the government finds the right regulation and supervision to prevent fraud and to prevent misuse of private data. And let me make the last pitch, because it's a subject very close to my heart. I feel fintech could worsen the gender gap. And I think particular attention is needed to make sure that the women are not left behind.
No, it's a terrific point. Ronaldo, what's your sense in terms of, I think the things Ratna mentioned make intuitive sense in terms of where things that are kind of held back financial inclusion. Are there areas that you see in addition, and maybe in particular, if you could speak to kind of how blockchain could potentially help either overcome those barriers, circumvent them?
Sure. So first, I agree with all the points that Ratna mentioned, connectivity, every and each point. But I would like to add also the problem of the user experience with financial services. So one thing that keeps people away from the banks, and that's certainly the case of Brazil and other developing countries, is that they don't really know how much they will be charged in order to use banking services. So banking fees, they're not clear. You don't know how much you pay. You don't know if you pay for one single transference, which was the case of Brazil and it still is right now. Even if the fees are very small, if you belong in the bottom of the social pyramid, those small fees, they make a lot of difference for you and for your life. So this is one of the barriers that I see. So that's why I think like fintechs are succeeding in building better user experience systems that are easier to use and also clearer in terms of how much you have to pay for those services. And in my view, when you think about the role of the blockchain, it goes the same way. So first, the blockchain can be very efficient, right? So costs for international money transfers, which are very prohibitive. If you are part of a diaspora community in the US, in Europe, or in another country, usually sending money back home or sending money to family members that are in another country is something that basically takes a huge portion of your earnings, because you lose in terms of the exchange rate. You don't really know what are the fees that are implied. Sometimes it takes days for the transaction to be completed. And I think the blockchain is a technology that can bring a completely new generation of financial services. So I'm already very excited about the expansion of the so-called DeFi scene, which is basically the decentralized financing and financial services that are being built on top of blockchains. And especially for the developing world, I think the value is very clear. So on top of that, if you also take into account the fact that a lot of local currencies are very unstable, and once again, that is the case of Brazil and other countries in the region like Argentina and others, it's very clear. You don't have really an option to hedge your savings like usually rich people do. and you're basically kept in a situation that you're pretty much helpless in terms of how to protect yourself against currency devaluations and so on. So once again, I think like blockchains, they can make payments cheaper, they can make access to financial services clearer with better user experiences, more accessible with very clear rules. And on top of that, they can also build services that are not available, especially for the most vulnerable portions of a society, especially in the developing countries. So I am personally enthusiastic about these possibilities, and I think we are still in the very beginning of deploying them. So I think they can bring a lot of important new things that are more efficient for populations, especially in the developing world.
Yeah, and as a marketing person myself, I appreciate the focus on the user, and I know some of the businesses and apps that have started building on Stellar, that user experience is something that they're really focused on, because if people can't wake their way through that experience, the utility of the product will inevitably have its limitations. So great. Well, I have a couple of questions I want to throw out to in the last couple minutes. Here's one from Indigo. And Ratna, this speaks to something you mentioned quickly. What role do you see financial education playing in the increased financial inclusion? And could blockchain potentially help with that? So if you could maybe start with the education piece, and we can maybe talk about maybe where blockchain could fit in on that.
Thank you, Jordan, for the question. We are at this moment actually doing a study looking at the different barriers to see which one is more important. But my gut feeling, and I'm going to say that based, of course, on these, what I've seen around the world and what I've read, I really think this combination of digital and financial literacy is probably one of the most important barriers right now, if you really want to accelerate. And the good news is, what we are finding is that, because of the reasons that you mentioned, that all these platforms are becoming much more user-friendly. That's how they're being designed, with this low cost of intermediation, the accessibility, even through just mobile phones, and the flexibility it has. Let me add that, which is you can sit at home in the middle of the night because you're too busy during the day, and you can pay your bills and you can apply for loans. We should not underestimate that. And another factor is greater customization. Very interesting. There are a number of fintech companies around the world. They are small, but they have, basically got into a niche market where they understand the local culture, the needs, and they are also actually partnering with their customers to educate them. And I feel that if these small companies can do it, I think the government should really step up in this area. I mean, I was shocked to see that around the world, most countries do not have any financial literacy program in schools at all. Digital, yes, they're doing some of that, but not the other aspect. So the bottom line is, I think either by themselves or in partnership with the private sector, the government should step this up tremendously. It would also educate them how to prevent fraud as a customer, right? So there's many aspects of inclusion that would benefit from financial and digital education.
That's great. Well, as I predicted in our preparation session, I knew that this is a discussion that could continue for an hour, but we are out of time. I want to thank you both for your time and insights on this topic that's so core to why SDF exists and what we're focused on